Welcome aboard Wealth Creations Monday Market Outlook. I'm Matthew Buckley, the Chief Strategist here at WCI, and had a very interesting week last week that we debriefed on with Friday's debrief. But hopefully after a nice Passover Halloween weekend, we're relaxed and we can hit the market pretty hard this week. So what do we see on our radar for next week and the coming weeks? Well, I'm going to segue off of what we debriefed on Friday because it's very important that we recognize what happened last week and, more importantly, what happened because of the job numbers that came out on Friday. So let's get started. So on Friday, as we discussed, the government came out with their unemployment numbers, and it said 120,000 jobs were created. Now, remember, that's a net number, folks. So even though businesses laid off over 400,000 Americans, they hired some more, and obviously that's a net number. So that takes into account the losses and the additions there. But here's what's critical, folks. This report snapped 3 months of 200,000 plus job gains. And that's the best. We were on the best run since 2006. Now, if you remember 2006 housing market, people were waiting in line to buy houses. Everything was going great, whistling zippity-doo-dah, and then the world ended in the next couple of years. So 3 months of 200,000 plus gains kind of was giving the market a little bit of wet cement basement there, right, to build on. But also in this report, the jobless rate fell. I'm not going to say fell. It notched down, let's just say, from 8.3% to 8.2%. Now, that's the lowest point in 3 years. Again, kind of good news. But like we talked about on Friday, folks, and I want to spend some time on this, a little more time, until you fully understand what the jobless rate means, because this drives our market. It drives what the Fed's going to do with interest rates and monetary policy. It drives everything. Again, you need to take a look at the Bureau of Labor Statistics site. This is where the official numbers come from. But again, U3 is the number that they use for the official unemployment rate. And we're going to take a look at a graph that the Journal had over the weekend that just really nails what we're going to talk about today to a T. You have got to take a look at this U6, folks. Absolutely mind-blowing. Now, again, as we talked about on Friday, it's been in a downtrend, but U6 is no kidding the total unemployed. So let's get back to the Journal because I really want to dig into one of these great charts that they had. But the jobless rate falling to the lowest point in 3 years, it's actually troubling because the retreat was due less to businesses hiring than people giving up looking for work. And that's what's disturbing, and that's why you have to look at that U6 number. For the past 2 years, this is why even good job numbers, the market actually usually has short-term attention deficit disorder. Now they're having a little longer-term memory issues, which is actually turning out great for us. Over the past 2 years, these employment numbers have started out strong and then petered out. So the market has one eye on the rearview mirror while they're trying to look forward. But again, folks, as a CEO and a leadership consultant and business consultant in many Fortune 500 companies that I work with, they're sitting on their hands. They're saying, Matt, we are not hiring right now because, first of all, we don't know what the future holds. The big thing on the radar for them is the election. Another 4 years of Obama, who secretly whispers to Russians, hey, just don't worry about it. Wait until after my election, and then I'll throw this whole missile defense thing under the bus. What else does he have in store for us if he wins a second term? Mitt Romney, obviously seen as pro-business. The guy ran Bain Capital. He knows how to break companies down, build them up, and streamline them. So, one of those will be seen as pro-business and good for the market. And here we go. And one will not be. So Election is definitely one measure there. But also, throw this into account. Saw a headline this weekend. High gas prices. It's an immediate tax on all of us. When it takes over $100 to fill the family truck store, you go to the gas station and it actually cuts you off from filling your vehicle up because it was too expensive. That's in trouble. That's serious trouble. $7 a gallon on Catalina Island. Now, I had a sailboat out in San Diego and sail out to Catalina. Obviously, it's an island and gas is going to be a little more expensive, but somewhere in the United States has broken the $7 mark. How's that hit you? So this unemployment number is obviously going to send, or did send, obviously the market was closed on Friday for Good Friday. But the futures tanked, the dollar tanked, and people started running to bonds. So that really wasn't a good thing. But now I know many of you to investing are new and kind of don't realize that the market sometimes is counterintuitive. Of course, the futures are going to be down, and the flight to bonds and everything like that. And hopefully, we'll talk about a couple positions we have on in a model portfolio in one of our subsidiary companies, but the market is weird. They're actually like, well, these bad unemployment numbers might actually be good news because that might make the Fed want to do what? QE3. The market tanked last week on no QE3, but it might actually rebound on the fact that these job numbers were bad. Now, initially, the market will digest them as bad news, sell, but in a way, the market's thinking, well, good, maybe this will force Helicopter Ben to go into some QE3 there. So it's not all bad news. Traders might see this as a potential, opportunity for a QE3, or at least the Fed to think about it and start mentioning it instead of, in the FOMC notes that came out last week or testifying in front of Congress saying no QE3 for you. So let's take a look at our Trade Monster platform for one of our model portfolios over at Top Gun Options. Again, folks, if you don't have a paper trading account, you can open one at trademonster.com/WCI. And great rates, great tools for a beginner investor. Just love it. Know the guys at Trade Monster really well, John and Pete Najarian, just great dudes. Build a great platform. But let's take a look at the TGO, the Top Gun Options primary model portfolio, which is for folks who are relatively newer to options. We put on a trade last week, an iron condor on gold, which was a bet on a flight to safety. Usually when the market gets spooked, there's usually a flight to safety. Gold pulled back a little bit, which was interesting, but it's found a base. So we put on an April 151 with 155, 165, 169 iron condor. So that should look good tomorrow, along with VXX diagonal. Now, VXX is a derivative of the VIX, or the SIBO volatility index. And this is the fear gauge that you might be familiar with that a lot of people in the market refer to. So we have what is called a diagonal on, where we're long-term bullish on volatility. With all this bad news or kind of good news, or we don't know where the market's going, we believe volatility is going to spike eventually downrange. And by spike, we mean spike, not what we saw last week out of volatility. A little bit of a spike. Let's pull our radar into 5 days and check this out. That's really not a huge spike in volatility, folks. Yeah, it's about a two-point move, but if some of you can remember when the tsunami blew through, we had the VIX, the VIX trading up in the 80s, and this VXX was trading up in the mid 400s, which is just absolutely insane. So we have a couple good positions on in our primary model portfolio. If you want to take a free test flight of the Top Gun Options model portfolio services, they're skill-based. They're not one size fits all. We have primary, and then we have intermediate and advanced, so different skill levels. And you can go to topgunoptions.com/advanced-alert to give it a free 14-day trial there. So I'm Matthew Buckley, the Chief Market Strategist here at WCI. Stay tuned for more videos from us. Make sure you check out our futures and options, equities, and Forex videos, as well as our blog. And make sure you forward it on to a friend. And be on the lookout for the next full-day equities event that we're going to be sponsoring soon. That'll be a full day of training with some of the best in the industry. So have a great week, and we'll see you on Friday for our debrief.